we kind of take a look at that plan. Here's what we thought we'd be doing. Here's where we are. Any changes? And whether it's tax planning that we have to focus on in some years, other years it might be estate planning. There's just so many different pieces. Education planning, because grandchildren are going to college, and how are we going to help parents fund that? And so if we're in communication with our clients and if we set that expectation that we're going to chat and roll up our sleeves at least twice a year, that is a great way to make sure that the plan is staying current. And it's not as if it's this sort of like on the shelf, here we are, let's pull out the plan, dust it off, see where we are. It's a living, breathing experience that we're talking through. We're constantly modeling what if scenarios and really helping people make good decisions, right? I want to drive positive outcomes over time, and I want to get you to consider doing things that you wouldn't ordinarily do if you hadn't hired us.
Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to Sterling Insights. I'm your host, Roger Silk. Today we are joined by Melissa Bouchillon. Melissa is the co-founder of SoundView Wealth Advisors. She is also a certified financial planner, and she has a passion for helping families build thoughtful, lasting financial plans. Melissa has almost 20 years of experience, a strong sense of purpose, and a deep commitment to her clients and helping them achieve their goals. She's active in her Savannah community, and though she hails from New Jersey, so you won't hear that charming Southern accent. She's on several nonprofit boards, and she somehow still finds time for running, gardening, equestrianism, and being a wife and mom. And Melissa, we are so pleased to have you with us. Thank you.
Roger, thank you so much. I'm really happy to be here.
It is delightful to have you. I just want to start off a little bit with some of those personal things. That's an awful lot of things to be able to juggle along with a career. How often do you have time so the horses probably are the one that take the most planning, right? The kids are there and you can't get away from them. At least if your kids are anything like mine were when they were young. How often do you get out and ride?
That's actually a good question. Fortunately, we have a spectacular barn, and my daughter loves to ride horses, and she actually rides competitively. So I try to ride 2 to 4 times a week.
That's awesome.
Yeah, it's pretty incredible. So
yeah, that is pretty incredible.
Drop Bellamy off at school and head right to the barn. The horse is tacked up and ready to go, and I'm actually able to ride before I go to work.
Wow, that's awesome. What does your daughter compete in?
She is competing in long stirrup in the hunter jumper space.
Okay, so very briefly, and I know we could talk about this for an hour, but people who don't know what that is, maybe you just give a very brief explanation.
So she basically loves to jump horses, and the discipline is hunter jumper. And so she actually goes around courses and jumps 2-foot jumps. And her hope is to continue on and go up to 2.6 and 3-foot and continue to excel.
That's really cool.
It is. It's pretty amazing. And it's incredible to see her focusing on her passion and just how much it takes a lot for anybody to get on a 1,000-pound animal and go around a course and get it to move and get it to jump over jumps. And it's just incredible, really.
Yeah, I have ridden horses, but I've never jumped them. At least not not volitionally.
Not intentionally.
So I'm going to segue a little bit to the business end of things. What got you started in the financial industry?
So believe it or not, now it's over 20 years ago, 21 years ago, I was a teacher and I had taken in college finance classes, accounting classes, and then also a psychology undergrad was actually my degree. But while I was working in college with children with autism, I decided to go get my master's in education. And after teaching for 4 years, I loved teaching. I loved working with the students. But I also found myself thinking, as I look ahead over the next 20, 30 years, how do I want to drive impact? And if I have a family, I felt, okay, this is tapping that same part of me. What else could I do to make a difference? And so back then, I took one of those tests to figure out what I would be good at, and financial advisor came up. And so I thought, okay, I got that idea. If I could help people, you think about it after your family, your faith, and then also the friends and the charitable organizations you want to impact, your finances allow you to do all those things. And from a perspective within our society, we're taught not to talk to anybody about that. And I thought, wow, I could really probably help people by connecting those dots and really putting together plans to figure out how to take them from where they are and really help them in a way of not just their investments, but really connecting all those dots from estate planning to their charitable giving. So I became really interested in it, but I thought, could I do this? And so I had to find where's the best training program in the industry. And at the time, it was Goldman Sachs or Merrill Lynch. And so I started to look for a job back in 2002 in the financial services industry. And back then, you would look in the newspaper and nobody was hiring in '02. If you remember, back then, we were in the
I
middle of a
remember.
correction. And so it wasn't until 2004 that I was able to find an opportunity at Merrill Lynch to enter their training program.
And that, if I recall, though, was that an 18-month program then?
It was 18 months if you were able to go through quickly, and then it could be as long as 24 months.
Uh-huh. And very briefly, how did you find that program and what were some of the more memorable things that you learned from it?
So that's interesting that you asked that today because I just kicked off we have a group of new hires at SoundView where I was kicking off our training program just today. And so the program was incredibly impactful. I got through it within the 18-month time period. And then after moving through the program and getting my CFP, my Certified Financial Planning designation at Merrill Lynch, I was asked to run the training program. So I've always been involved in wearing two hats while I've been in this business. One is working directly with clients, which is where my passion lies, really helping people figure out a plan and whatever there was weighing on them, whether it's insurance needs or investment needs or concerns about their estate or what's going to happen when they're gone to their spouse, all of those things. I love that problem solving piece, but I also love cultivating new advisors and helping them really see this industry and see the opportunity here to make a difference. I think all too often, a lot of the programs in the industry are approached from a sales perspective and sales training, whereas I really like to spend time with people that are starting in the business and learning and teaching them about building a financial plan and how to connect and how to solve people's problems and help them not just for a year or two, but really for decades. And that was something that was very good about, I'd say, the program at Merrill Lynch early on, and is something that we've brought into our training program here at SoundView as well.
Uh-huh. So at SoundView, have you modeled your training in your in-house training programs on maybe a cross between the CFP and the Merrill programs?
I would say that the Merrill program gave me a foundation, but I was at Merrill Lynch for well over a decade, and I spent a lot of time in leadership positions there, helping them cultivate and train lots of folks within our region. So I used a lot of what I did with the offices that I ran at Merrill Lynch. Some of those best practices I have taken and used here as well, but they aren't directly necessarily from the Merrill Lynch program. It's really pulling in from a lot of different experts, from people that were big in the industry and training people 30 years ago, like Larry Biederman, to really more modern thought processes of today, too. So it's just really a combination of a lot of different things throughout my career that I try to bring to the people that are really starting this business so that we can mentor them and help them develop. Because I do think this is one of the best industries to be in. I think you can really help people if you take the right approach. And unfortunately, there are thousands of advisors out there, not all created equal, and most of them are trying to sell you something rather than give you good objective advice.
How long ago did you co-found SoundView?
We started SoundView in March of 2018.
Uh-huh. And so tell us a little bit about the founding and how you've done since then. What's going on?
Yes. So I loved Merrill Lynch when I was there. I was given tremendous opportunities and had phenomenal mentors that saw things in me that I didn't even see in myself. So myself and my partners really thought that we would have been there for decades and I would have retired from Merrill Lynch. But then, as we all know, the great financial crisis happened. Bank of America bought Merrill Lynch, and for a long time, Merrill Lynch still felt the same, where it embraced the entrepreneurial spirit and Merrill Lynch served as a conduit for our services, but we were able to really serve clients and act as a fiduciary. But over time, what we saw transition was kind of the goals of Merrill Lynch became more of the goals of the broader organization. And there was more of a product push around mortgages, promotion of credit cards. And that really wasn't our approach. And so we started to say, okay, if we're going to do this and make a change, would it be better at a UBS or a Morgan Stanley? Would it be better to join another existing registered investment advisory firm, or should we create our own? And we decided after a lot of research and due diligence that we wanted to create our own, one, because we really liked driving the culture. That was something that was important to us to be able to create something where not only would clients be taken care of, but the people that worked with us and alongside us day in and day out would feel like they were taken care of and given an opportunity to really develop into the best versions of themselves. And so in 2018, after a lot of due diligence and planning, and with the help of focused financial partners, we rolled out and created SoundView Wealth Advisors. When we were at Merrill Lynch, we managed about $1 billion in assets and liabilities. When we came over, we knew that we were going to shrink to grow, and we wanted to bring people over that really believed in our planning-based philosophy. And we moved over and had about 800 million initially when we started. And then today we have over 2 billion in assets under management.
That's pretty impressive growth from 800 in 2018 to 2 billion now.
Yes.
How did you guys do that?
We did that by taking care of people and putting the client first. It's really
Uh-huh.
not that complicated. And if you just do the right thing for people, take the time to get to know them and truly help them, if you think about it, that's different, right? Than most times people go into an organization and they're being sold a product. Just the platform that we exist in today really allows us to be that objective fiduciary and take that approach that we've always had, but really be able to do it so much better because within the confines of any organization like a Merrill Lynch, Morgan Stanley, UBS, I can only help you with the products that I have. Whereas now we operate in a true open architecture platform and you just work hard, do what's right, take care of people, and the word gets out.
What is your an ideal client? I'm sure that you have a very large spectrum of clients, but is there a particular client that you guys feel you are an ideal fit for?
Yes. So a couple things. One, I get that question like, so do you have minimums or who's your ideal client? And I always say there's two things because I have grandchildren that I'm working with that have $10,000 and then I have clients that have $100 million and everything in between. And one is after doing this for 21 years, I want to work with good people, nice people that I get along with and enjoy spending time with. And then two, I want to work with someone who's willing to hear my advice and at least take some of it, right? Otherwise, there's no point in hiring me and spending all that time, effort, and money, and quite frankly. And really, I think that we do the best work with families and individuals, whether they're business owners, retirees, just starting out, starting a business, graduating from medical school, they've got debt management, and then they're looking to save. We really have the bandwidth to help individuals and families over their lifetime and have really built out a team within SoundView that can address those needs of the varying generations.
And geographically, you guys are based in Savannah. Where are your clients?
So our clients, if you had asked me this 20 years ago, the majority of our clients, about 80%, were in Savannah and on Skidaway Island. And today we have clients all over the country, and then even some that live internationally. The majority of our clients are in the Southeast, but I'd say probably about 50% are in Savannah area.
And so it's not necessary for you to see your clients in person on a quarterly or semi-annual basis.
So over time, just with working with families and then parents pass away and there's kids that live all over the country, or you get referred to friends and family that are looking for advisors they can trust. My clients have grown to where they were everywhere. And pre-2020, most of those clients I would go visit face to face, try to at least once a year, or they'd come here and then we would do calls, conference calls, but people really weren't very comfortable with video conferencing.
I
And it's
remember.
so interesting. After 2020, everybody got really comfortable with Zoom and they like the efficiency of it. And so now I still value there's no replacement for kind of face-to-face time. But the nice thing is we can do a lot of business over Zoom and then get together for dinner when we're face-to-face. Or if we're doing a big family planning meeting where we have multiple generations coming in, that is something we want to do face to face. But Zoom has driven tremendous efficiency and just people being more comfortable with that. Now, folks that sometimes are even local, it's just easier for them. So that convenience factor is nice. So again, we try to meet people where they are.
Yeah, that makes perfect sense. Is there any particular area of specialty or expertise? Maybe it's planning, maybe it's some kind of investing, maybe it's alternatives, anything like that that you guys really focus on at SoundView in addition to all the basics that clients need to be
I
taken care
think
of?
if you had to pinpoint one piece, it would be really the advanced planning and the true coordination. A lot of times in the beginning, someone will say, "Oh, I'm going to do a plan," and they set it and they forget it. Whereas for us at SoundView, that plan is the foundation that we build all decisions, future decisions off of. And it's constantly evolving. And as life changes and families grow or families shrink or things happen, we're constantly updating that as there's tax law changes. And so I'd say planning is a huge differentiator for us. But in this industry and to do what we do, you really have to have expertise in investments. You have to know and understand alternatives and how they play into an overall plan. You have to really be able to do some good cash flow planning, both for businesses and individuals. You have to have a great understanding of estates and what it looks like as we transition wealth from one generation to another. And so the what's wonderful about what we do is it's never boring, it's never dull, and there's just so much that we have to be able to dig into. And so building out a team that focuses on these different areas has been really critical to our success.
You mentioned changing tax laws. Do you revisit the plan every year? You don't just do the here's how your portfolio did. You look at the plan. Here's where we were. Here's what we were planning to do. Here's what we did. Here's what happened. Here's what you did. Here's changes. Is that part of your annual review with clients?
Yes, and actually, we say that we're a lot of clients after they go through the process of hiring you and say, okay, you're going to handle this for us. Okay, that's great. But part of that relationship and that agreement is just like the dentist, you go see him twice a year or her twice a year, you're going to come sit with us. And whether it's face to face or in a Zoom meeting where we really talk through all of these pieces, we talk through what's the macro environment look like on an investment level, what are changes we've made in the portfolio, what's our outlook, what do we think is happening, how does that really pertain to you given where you are in life? And then we kind of take a look at that plan. Here's what we thought we'd be doing, here's where we are, any changes. And whether it's tax planning that we have to focus on in some years, other years it might be estate planning. There's just so many different pieces, education planning because grandchildren are going to college. and how are we going to help parents fund that. And so if we're in communication with our clients and if we set that expectation that we're going to chat and roll up our sleeves at least twice a year, that is a great way to make sure that the plan is staying current. And it's not as if it's this sort of like on the shelf, here we are, let's pull out the plan, dust it off, see where we are. It's a living, breathing experience that we're talking through. We're constantly modeling what if scenarios and really helping people make good decisions, right? I want to drive positive outcomes over time, and I want to get you to consider doing things that you wouldn't ordinarily do if you hadn't hired us. And so it's getting them to think of, okay, what could I be missing? So I always tell people, I'm going to tell you the good, the bad, and the ugly, because that's all, there's always those pieces, and help them weigh out the pros and cons so that we can make good decisions. And if I can help people make good decisions over time, they're going to reach their goals. They're going to be happy. We're going to work together for decades.
A client comes to your firm, do they deal with mainly one advisor or is there a team? What would the client experience be like?
So there's a team, it's a team approach. And so at SoundView, we always want to make sure that there's more than one person has a deep understanding of who you are, what you're trying to accomplish, your personal kind of moving parts and needs, so that if I'm on a podcast or if I'm sitting with another client, there's somebody else that you don't have to say, hey, I'm Roger Silk and I'm Melissa's client, and here's what they know you, they know Roger, they know what your needs are. And so there's this great understanding and familiarity. So find it very important that you have a relationship across the partnership. And then we do have, so for any given client, there's a group of people that help them on a day-to-day basis.
That that makes perfect sense. And I'm sure it helps with the client experience because there's nothing like calling up and it sounds like you're talking to a robot because they don't know you from Adam.
Yeah.
It's one of the big things I think that distinguishes some of the firms where you might be able to call, and if you get your person, he or she is there, but if you don't, you get someone who doesn't know who you are.
And if they're out playing golf or they're on a golf trip and not going to be back for 3 or 4 days, or they're out on vacation, a lot of life can't wait, right? There are some things that, okay, yeah, when they get back, we can address that. But there's a lot that we do that's real time. And so we always want to be able to address people's needs. And that's just not market related too, right? There are things that are happening as people approach end of life or children being born or a house selling or divorce. There's so many things that happen that we can't plan for, and one person can't do it all. And so making sure that we've got our clients comfortable with the team that's serving them is critical.
As a firm, do you guys have a investment philosophy that you share with clients to make sure that there's a fit there?
We do. And so anybody that starts working with us, and I've said this a few times, but we really do spend a lot of time on the front end building out that financial plan. And we do that so that clients can get an understanding of how we think, how we would help them, the advice we're going to give to really see if it's a good fit. And then we're doing the same thing too, right? We want to make sure that whatever your expectations are, we can meet those. And part of that is having realistic expectations from an investment perspective and how we would handle things. Most of our clients have the need to grow their assets over time or have really grown them, and now we're in a preservation mode. And so just understanding, taking that time up front to understand where people are coming from, and then also make sure that they understand our philosophy, I think leads to good long-term success and a good fit. And hey, we can't be all things to all people. And so not every client is going to be a great fit for us. And so we recognize that, and we're not going to be a great fit for every client. And so that process of going through the plan up front, yeah, we spend some time and we spend some effort and some work, but it's a good way for clients to really know what they're going to get if they hire us.
What would be an example, Melissa, maybe of a client or a prospect that's not a good fit?
That's a very good question. So somebody that thinks we're going to day trade, right? Somebody that is looking for average returns of 40% a year. Someone who I always say, regardless of how much you have in assets, you can spend them down, right? So if somebody has unrealistic goals, we're going to tell you, hey, here's where you are. I think this is achievable. I don't think this is. And here's the pathway to make what you want to do successful. But if they're not willing to do those things, I'm not a magician. If you're spending too much and going to run out of money, there's only so much we can do. Spend less, drive more income. We can't great returns, you can't get enough great returns if somebody's withdrawal rate is too high. And so I just try to be really open and honest with people, provide them information so they can make good decisions, always provide them like, here's the pathway to success, but I'm very honest about that pathway. And if they're unrealistic about their expectations, it's probably better if they try to figure that out on their own or with someone else.
So when people come to you, sometimes they're probably surprised sometimes where they have a spending habit that isn't sustainable based on their assets and visible future income. What kind of success have you had in educating people that something's got to give here? And if you want to work with us, it's going to have to be the spending because we don't want to be presiding over the plane crash.
And so you always want to handle a situation like that carefully because a lot of times, if you think about the last couple decades that I've been doing this, and for a lot of retirees, if they retired in the late 90s, returns were crazy. A lot of the planning, if they happened to do planning, were based on very unrealistic return assumptions. And then they hit that fabulous decade, the lost decade of 2000 to 2010, where the S&P 500 averaged 2.1%. And oh, how great. Interest rates have been incredibly low, basically from the great financial crisis until the last several years, right? So
Yeah.
it's been an environment that's tough for retirees, even people that had plenty of assets. And so I always want to take that perspective of having a great understanding of where people are coming from and then finding a way to deliver realistic news, like what you're doing is unsustainable. But I always present that with the good news is people think you have to make like crazy changes to get back on track. And a lot of times you don't. Small tweaks and changes can drive great impact over time. And so we spend a lot of time illustrating that, providing hope, but realistic hope. And so most people, if walking through that process, they understand, they get it. And we've had pretty great success around helping people succeed throughout their retirement. And not to mention, with all those things, pitfalls that I just mentioned, people are living a lot longer, right? And so if you
Yeah.
have somebody that retires at 55, we're planning for more time in retirement than you actually worked. And so just helping people manage through that, I think, is really important.
When you have retirees and they're living basically off of their retirement plans, do you tend to have people spend a certain amount, or do you have that vary with returns?
So it really is, we help them figure out what a range is that's safe based on their income level, based on their needs, based on debt levels. Oh, there's a lot of different factors. And obviously, if they have no debt, that's less threat because it's easier to compress expenses when you don't have large kind of outflows from a debt perspective, whether it's mortgage or car payments, whatever they are, student loans. And so we help people figure out what's that range, where's my budget range? And then we manage to it. One important component that we build into every portfolio is what I like to call sort of the bomb shelter. Because if we're working together and we're working together for decades, if we're working together for 5 years, we're going to see ups and downs, right? The market's going to be volatile. And ideally, when we structure a portfolio, whatever someone has in the bucket that's at risk, let's call it, where we're trying to really achieve growth, whether it's through alternatives, private equity, public equity, real estate, we have to be able to get the long-term average returns. And in order to do that, we never want to be forced to liquidate when the market's down. And unfortunately, I wish I could tell you I had a crystal ball and I could tell you exactly what the market's going to do, but I don't. So I'm very upfront with people. I tell people always, listen, I promise that if you hire me, we're going to go up together in your portfolio, we're going to go down together. And I don't know in which order is to be frank, but I do know that we're going to construct a plan that not if things are down, but when they're down, going to be forced to liquidate what we have at risk. And what that does is it gives people the staying power so that they achieve the long-term average returns, whereas most investors don't because they're buying high and selling low and they're riding the emotion. And then we build out a bomb shelter through cash, through bonds that they have coming due, through other sources so that we know we always have enough liquidity to more than meet their needs. And that has been a really successful strategy over time.
Do you end up doing a lot of hand holding during some of these very stressful market periods?
So there's always more hand holding, but it's interesting. I went through the great financial crisis early on in my career. I'd been doing this 4 years, and then, the Dow basically got slashed in half. And so what I realized there is that going through that, and anytime you go through a crisis, you better come out learning something. And my big learning moment there was if people had the capacity to weather through it, they were going to be fine. And so, how do I prepare people through every conversation we have to build up that muscle to know, okay, we've got a plan. It's going to get bad at some point when I'm working with Melissa or her team, but we've already got a way that we're going to be able to weather through, not 10 bad months in the market or 12 bad months or 2 years, but we could go to 3 to 5 years or 5 to 10 years of really depressed markets before we'd ever be forced to liquidate what we have at risk. We're fine. And so coaching people to that mindset over time really creates better staying power. And so when the markets get volatile, no one likes it, but they know they have a plan and they have the ability to see it through. And so that's something we've done differently coming out of 2008, 2009 to make sure people had staying power.
Unfortunately, we don't have unlimited time. Melissa, is there some particular thing that you would like the audience to hear or to know that we haven't had a chance to talk about yet?
I would just say that so often we're all so busy with life that we save and we buy insurance and we have our tax person and we have all these different pieces, but we don't always take the time to slow down, to pull it all together and to have a plan. And the reality is there's going to be stuff that you confront in life, whether it's kids going to college or retirement or the death of a spouse. And so the more we can get ahead of some of those life events and you can start to think about things in a more coordinated fashion, the better off you are. And so I would just say take the time and try. I would encourage people to really find somebody they trust that they can lean into, that they can really walk through. Here's where I am, the good, the bad, the ugly, and get that help. So that would
Mhm.
be my biggest advice. And it really applies to people at every stage of life.
And with all the success that you've had, what do you find that right now is the biggest challenge?
I think the biggest challenge in our industry and for people is I think they get too micro focused on kind of a product or a stock or indexing versus active management. And they get hung up on those items rather than stepping back and looking at the big picture. And what's our constant challenge and what excites me every day is really trying to take people from, yeah, that decision matters, but there are all these other decisions, like what's your big picture asset allocation? That's going to drive 90% of your return. Let me spend a little time and energy on that, right? Or hey, how about how much income do you have coming in and how much are you spending and how much are you saving? And so trying to get people off the micro, because it's fun to talk about, oh, NVIDIA and what it's going to do, or what do you think about Tesla? But really getting people away from that and getting them to think bigger and about harder things
No, that's
is,
a great
is
answer.
the greatest challenge, I think, that
Yeah,
we have as advisors. And most advisors are trying to sell people something. And so they would rather talk to you about what you want to talk about and give you what you want and are asking for rather than what you need. And my goal is always to take the time to really get to know somebody, to find a way to help them, give them what they need.
it's a great answer. Melissa, where can the audience go to learn more about you and the firm?
You can go to www.svadvice.com, or you can always look me up on LinkedIn, Melissa Bouchillon, SoundView Wealth Advisors. And my email address is Melissa, Melissa, at S for sound, V for view, advice.com. We're always here and we're happy to help.
And just in case people are listening and not looking, do you want to tell them the cheat for Bouchillon that you told me?
Yes, and so my name is complicated and most people butcher it, but if you're not sure how to spell it, it's Bouchillon, Bouchillon.
All right. Thank you very much, Melissa. It's been a pleasure.
It has been a pleasure. Roger, thank you so much for your time.
Thank you for yours.
Thank you for listening to another episode of Sterling Insights. Stand out and supercharge your assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.